Cuppa. Let's have a cuppa.
Hello, and welcome to Virtual Investor Conferences. My name is Matt.
Hey, everybody. Good morning. I'm sorry. I tried my best yesterday to drive, and I don't know if it was the hookup in the vehicle or it probably was that I wasn't on a main highway. So sorry about that. I could see myself, but I didn't know how the audio was. I can't talk for long this morning. I'm going to have a cuppa with you, and just try to give some thoughts. I know it's draining. We've been trained over the last 4 years to expect movement, excitement. Stocks got to go. But Railtown isn't one of those stocks. It's not an AMC or a GME or one of the rocket ships that go up and then come right back down. Railtown, once it gets going, is going to just keep going up. Now, nothing goes straight up. But it's just going to keep the value's going to keep increasing. 2 days ago, I did almost 4 hours, about 4 hours, 3 hours and 45 minutes of a live with you guys, and I wasn't live. So I don't remember which points I've said to you and I haven't said to you. Yesterday, you didn't hear me. So if I'm repetitive, my apologies. But let's start with, there was a tiny bit of news last night. It's not news. It's just housekeeping. But last night, Railtown filed that they had a material change. I see. I sent it to a couple of people, and I guess it doesn't send, so I have to open it up again, which is fine. Just have to go into the search. And it takes everything in Canada is just a little slower than in New York City. But that's all right. They built a country, which will soon be the 51st state. I'm kidding. Although there's probably some realignment of states coming in our future. All right, here we go. So last night, the company filed, I don't know what time. That's interesting. It doesn't really give a time. Yes, it does. Right after midnight last night, they filed a material change report, and there's nothing in it that is new to you. It's dated. It's a Form 51102F3 material change report. Railtown AI Technologies, and it's out of Burnaby, British Columbia. The date of the change is October 6th, which is, you saw that. I didn't look it up, but I assume that's last Wednesday. Actually, the date of the change was the 6th. The news was on the 8th. So I guess they submitted the information to whatever the regulator is called, CIRA or FIRA or PIRA or something, on the 6th, and the news was released on the 8th. That's what you're familiar with. So on October 6th, the company entered into an amalgamation agreement with AI Partnerships, AIP, a newly incorporated, wholly owned subsidiary of the company. The amalgamation agreement, pursuant to which Railtown agreed to acquire all of the issued and outstanding shares of AIP in exchange for up to, don't think it won't be, 50 million common shares. I think what happened here, the reason for all this complication, they wanted to be able to tell their board and shareholders that AIP is going to perform. I mean, you don't want to just give shares to somebody and then they walk away from what their business plan is. Hey, we got the shares, might as well go do something else. That's part of it. But I also think there was a negotiation. I think it's a fair deal. You know, deals are never exactly what either side really wants. I think AIP probably isn't worth 22% of the company right now. I think the starting point is 17%. Maybe that's what it was worth. But the extra in there is what makes AIP valuable are the people and their ability to roll up these companies. And they now have 180 companies. So it's AIP is, I guess, potential energy, potential value, which will rapidly become kinetic. But anyway, that's why I think this is complicated. It was a negotiation. And that's probably why they didn't enter into the agreement finally until October 6th. I don't know. Just suspicions on my part. Doesn't matter. My opinion isn't negative, or I think it's very positive, this deal. But I'm not trying to be negative at all. I guess I'm trying to understand why it took all the way until October 6th to get the amalgamation agreement completed. I shouldn't use that word. It doesn't look like it's quite completed, but let's go through it. So Railtown agreed to acquire all of the issued and outstanding shares of AIP in exchange for up to 50 million shares of Railtown by way of a three-cornered amalgamation, with the result that AIP will become a wholly owned subsidiary of Railtown during the closing of the transaction. They leave out the name of Digital, I think they do, which is great. That's clarity. That's what we New Yorkers need, clarity. Just simplicity, get to the point, bud. Here's your hot dog, move along. Yeah. do your talking and walking. That's how it is down here. So this is great. It's very clear. So the full description of the material change, this is for Railtown, pursuant to the amalgamation agreement, and then they reference the news report. The company agreed to issue the following consideration: 40 million shares at a deemed price of 50 cents per share, which is Canadian, representing 17.8% of Railtown's outstanding shares on a fully diluted basis following the completion of the transaction. My opinion, that's roughly what AIP's really worth, maybe a little less. 15% I would have gone for, but you never get it, with such shares to be released in stages, which is great, keeps people motivated. And I don't know what exactly to be released. I think it means they can sell the stock in stages over a period of 18 months, or 36 months in case of AIP's founders. So the founders are going to be tied up longer than the shareholders. I would imagine relatively few shareholders that the company has. And then an additional 10 million shares at the same deemed price of 50 cents, representing 4.5% of Railtown's outstanding shares on a fully diluted basis following the completion, with such shares subject to escrow and to be released upon the achievement of certain recurring revenue milestones. That's where I think the negotiation came in. I mean, it just stands out. It glares out at you. AIP asked for more shares. Railtown might have said, you know what, we really don't want to give, they both wanted to get the deal done. Why don't we do it this way? Maybe that's what happened. The milestone here is very low. The hurdle is very low. So those shares will be issued. The completion of this transaction is subject to a number of closing conditions, including but not limited to. Now here, I'm not being negative, but I want you to listen to these conditions, because here might be why some of the buying hasn't come in yet. It might be. I don't think any of these conditions are difficult. There's one that might take some persuasion, I guess. But maybe not. Maybe this is all completed. Maybe by filing this, the next thing we'll see is the deal is completed. It seems like they're doing things logically. And, I've given attorneys a hard time in this because of the amount of time involved, but a good attorney lines up documents like ducks in a row, and she doesn't have any gaps in her documents. And so maybe this is a document here that needed to be filed before they can let us know that the whole thing is actually completed. But listen to the completion of the transaction is subject to a number of closing conditions. Listen to these, including, but not limited to, the approval of AIP shareholders, the conversion. So that's one. You got to get the approval of the AIP shareholders. That in Canada, somebody told me, I don't know. I'm not an attorney, and I'm not particularly, I've been to Canada, but that's about it. That approval of AIP shareholders may be by percentage shares, which they already have that vote pretty much, or it may be by the majority of distinct shareholders, which gets you in that whole argument of why the criminals screw up everything by shorting stock, selling stock that doesn't exist. Who gets to vote? But in this case, it's a private company, so that shouldn't be an issue here at all. Um, but anyway, it could either be the percentage of the shares outstanding or a, a majority of actual distinct shareholders, or both, I guess. Anyway, so that's the first thing, the approval of the AIP shareholders. Um, I don't think that's going to be a problem. This is a great deal. It's a fantastic transaction. You're taking a private company into a public company. I would imagine it's a leap in valuation to the people that put up money. So I don't think there'll be any problem getting that vote accomplished. It could be the mechanical steps take a few days, but that shouldn't be a problem. All right, the next one is the conversion of certain outstanding promissory notes of AIP into AIP shares. Now, that one, you would read it and go, uh-oh, who's going to exchange a note into shares? Well, it, I don't know the terms of those notes. But I would observe two things on the face of it. It may be that the conversion price was already set at a low number. So by switching into shares, whoever's got these notes automatically doubles or triples or quadruples their money in value terms on paper. But the other thing is the promissory notes have probably been given to AIP by people close to the transactions. One of the founders or one of the investors is very close to one of the founders. So I don't see any problem with that. It just may take a little time, you know. And then the next condition is um, dissent rights. Dissent rights. You know, like we used to be able to do in the United States. Dissent. Um, dissent rights have not having been exercised by holders of more than 5%. Again, that looks like a hurdle, but the only people in this AIP, logically, on a private level, are the people that came up with the idea. They're the founders. They're friends of the company. They're going to want to convert. So they're not going to dissent. Is my point. They're going to want to do this deal. Convert's the wrong word. So that's the next one. Dissent rights not having been exercised by holders of more than 5% of AIP shares. So that, again, I don't expect a problem, but there might be a mechanical or a procedural, there might be something to get signed, and that could take days. And they just agreed this deal October 6th. So maybe that's another reason for the delay. And then the final condition is the receipt of any regulatory approvals required, including the approval of the Canadian Securities Exchange. Again, I don't think it'll be any problem, but you got bureaucrats in there, eh? They have vacation, eh? Um, it's Canada, eh? So, by the way, we have our own in the United States. Our government, our regulatory people are like the World Bank, as my dad used to say. Over there, they do things SLOW We have the same problem. Whenever you get in with bureaucrats, they have the power. They have the power. Until they let go, then they don't have the power. You know, first you get the money, then you get the power, then you get the, you know, you get the, you know. So they need regulatory approvals, including the approval of the Canadian Securities Exchange. So all of that, I don't expect any problems on the face of it, but it takes time. It's a lot of moving parts, signatures, regulators. So that may be why the deal we haven't gotten that notice. Bing, it's done. And there may be buyers out there that do not want to invest until that final piece is complete. And that's, that's all right. Then there's several items that are not applicable too. And the CFO submitted it, Paul Woodward, and the date was October 16, 2025. I think this is a prelude to something else coming. I don't expect anything today. You know, you know my mantra. If you're an attorney, you see the weekend coming, might as well tell your client you'll have it ready Monday. And that doesn't mean Monday morning. Doesn't mean Monday morning. Try to see if I can save this to my photos so I don't need to locate it again. All right, I got that done. It's 8:45. I'll go through your comments because I screwed up yesterday and then the day before, so maybe there's important comments there. The prices this morning were not particularly good in any stock pre-market, and that brings me to the observation. That's funny. The code they gave me to sign in, the first three digits were the first three digits on account numbers at my first firm, and that which was Morgan Stanley, and then the second three digits were the first three digits on accounts at my last firm, which is Morgan Stanley, is now Morgan Stanley. Finger is 150, 148 to 152. That's actually in the green. This morning it wasn't. GDC's down 10 cents at 460. So if you believe there's an auditor, which I have no reason not to believe, and she's going to be able to prove that the Bitcoin's in the company, I guess you can triple your money there. But the market's not saying that. And that's my point I want to make. Nixie's actually up 4 cents at 183. Mountain, MTEN, is down 43 cents to 412, and so on and so on. But Railtown hasn't traded yet. the bid is 47.21. Interestingly, the ask is still relatively high. It's 55 cents. They'll tighten that up. But before I go to your comments, I just want to remind you, and maybe it'll start sinking in. I don't think that investors understand it. I don't even think Wall Street, so-called Wall Street professionals understand it. But what goes on in in most NASDAQ stocks and all over the counter stocks is not capital formation. It is not a fair market. It is not price discovery. The whole premise of a market is that you have a collection of brains, human beings, studying information, putting their money on the line in a fair casino with rules and a pit boss and guards. And when information comes out, when phone calls are made, when progress is made, it starts showing up in the price of the stock. It doesn't happen in any of these stocks. Adina Friedman is there to protect the criminal interests. I think they're criminal, but it's like slaughtering Palestinians. We're just so inured to it. Oh, it's got to be normal. Oh, they fight all the time. Marianne Adelson, worth $80 billion because her husband died, is dictating U.S. policy. It's incredible. It's incredible, people, guys. Incredible. But hey, that's the world we live in. But it's not normal. Make no mistake about it, it's not normal. And so what's happening, leaving that analogy aside, what's happening in these markets is not normal. You've got a handful of men, white, mostly out of New York City, Burroughs Park, Miami. I guess many are up in Toronto or are sourced out of our neighbor to the north, like fentanyl. And many are offshore, but in the United States, very concentrated grouping. I mean, maybe there's some in Connecticut or New Jersey or Long Island. But the point is, as you guys buy stocks, it's not just you. It's the whole collection of people with phones and following chat rooms and seeing stocks go up and day trading and listening to the day traders, and you get a buzz. Hey, this one's going to move. That's not investing. That's just hot shotting. It's just uh, uh, I don't know if it's 3-card Monte, but it's like a crap table where you're just constantly moving your chips and hoping the dice roll the right way. But as the stocks go up, these machines, just like the Terminator machines, they just keep coming. They keep coming in the movies. They just keep coming. All they do is sell. That's all they do is sell. You can remember with GME and AMC, even as the stock went up, they were selling. And finally it peaks. And then they can sell and it comes down quickly. If they haven't made their profits back, which I assure you they probably did, they get an idiot like Roaring Kitty to come on, and he breathes, he grunts, he groans, he exists, the stock goes up. And it goes up in waves. It's like a bouncing ball. Like, what, you remember those Super Balls? You bounce it, and then it bounce again. But every bounce is lower and lower and lower at its high. And then they just take that money out, and they're constantly stripping money away from investors. A very smart or intuitive person that I care for told me, we should just invest in the products they give us, like an ETF or a managed account. They'll let us have 8% and they keep the rest. What do we care? At least we got our 8%. And she was right. She was right. Because they're not letting you keep any more. These big pools of money, Stevie Cohen is in on it, in my judgment. All of them. All of them. Goldman Sachs, probably funds you have in your retirement plans are in on it. Not every single stock, of course, but it's how they juice returns. And it's created, there's that industrial scale attack to steal the entire market cap, but then there's the cottage industry of the bullies and the cowards that don't give you their name, but they come in and join in. And then there's the day traders too. And it's all computerized. It's all computerized. So it's relentless. There's no emotion. They just sell, 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 sell. And what happens is if in a headline, the word MOU, or in the first paragraph, second paragraph, it says weeks, it says acquire, it says an LOI to follow, that just redoubles the computers just start selling. And the goal is to bust any agreement between CEOs. It's just to destroy a company. We're in a competition, this, with China. China's winning. We can't even produce right now our strategic minerals. And apparently it'll take 5 to 10 years to do so. That's because for 25 years, we have deferred to these financial jerks, and we haven't put any money into mining. We haven't put any money into oil and gas. We haven't put any money into anything other than the financialization of our markets. And Wall Street, you can use the example of a Zuckerberg or a Bezos, and then the one that Alex Kinnear is using when he talks recently. He talked in a different context. He talks about Elizabeth Holmes, that blood woman. I read the book about her a couple of years ago, and that whole story made no sense. He's got a theory that they wanted to get our blood into the data on our blood. But anyway, Wall Street picked her company and did the seed rounds, the pre-seed, the pre-money, the seed round, the Series A. They always change the names of these. The Series B, the Series C, and they bring it up through their channel. And the reason they let Adina Friedman destroy the NASDAQ market and Chuck E. Cheese Cromwell destroy the over-the-counter market, there's no competition to their greed. Private equity is set up. Wall Street's daisy chain gets going. And each level up the valuation escalator, they make their fees. They make their bones. And there's no competition. None. None. They can create the valuation. They can state what it is. You can see this, by the way, in SPACs. They apparently use fraudulent valuations because as the SPAC de-SPACs, they destroy it. It's the same men. So it's rigged. And to the extent that you listen to the Charm Boys, I call them that because I don't know what else to call them. And I don't want to use, it's not a personal attack on anybody, but you got to recognize what they're doing. They don't recognize it, perhaps. And the CEOs don't recognize it. But the machines do. And as CEOs, I mean, take a company like MMAT, which I didn't invest in. Great ideas, great technology, geniuses, destroyed. But then the attorneys come in, all reasonable men and women. The board comes in, all reasonable men and women. And they're all reasonable together. And they continue to be reasonable to their doom. Because they can't believe that a handful of people are going to slaughter Palestinians. Sorry, I always make the comparison, but it's the same, it's the identical process. Incremental gains, incremental gains, incremental gains, change the laws incrementally, change the story incrementally, get the attorneys to do it, control the media, control the story, just keep moving, blame the victim, blame the victim. Oh, you shouldn't be an over-the-counter anyway. It's the same pattern. Took 25 years to create this. But if the United States wants to get out of its morass, we've got to go back to honest markets. We have to go back to honest markets. I think Donald Trump should, or Kamala Harris, whoever, should take over the counter markets. Just take them over. Get rid of Chuck E. Cheese Caldwell and tell them, hey, you made enough money. Go smile in a yearbook somewhere, and we're going to have a fair market. We're going to enforce securities laws, and then you'd see brokerage firms address that market. You'd see research analysts. You'd see trading desks, and you would see price discovery. And guess what else you'd see? Money would be raised to go find whatever it is, molybdenum, germanium, uranium, whatever the rare earth metals are. There'd be money to go find them if we had honest markets. Anyway, I guess my point there as it relates to Railtown is that all you're seeing over the last weeks, and particularly while the attorneys take their sweet time, and it's very valuable time, by the way, the selling is relentless, but it's all fake. It's not price discovery. It doesn't mean anything. They are not thinking about the company. They just have one goal: bust the merger, bust the good news. How? Well, if the company needs to raise money to continue to meet their plan, all we do is create endless new shares that don't exist. When they come to market with money and to raise money, we'll go to our buddies, whoever the bank is, and we'll cross the cash we created. So we'll have a profit that way. Or the two CEOs will get in an argument about the valuation. They'll walk away. The stock will collapse. Or they'll go forward with the deal and it will be so destroyed on a per share basis. We'll make money that way too. And it just happens over and over and over again. The only one, it looks like this group of insiders and whales and maybe Univest and offshore people, the only one it looks like they're trying to catch it out is possibly GDC with Bitcoin. They've made a lot of public assertions, but you know what? I thought one of the whole things about Bitcoin was it was private. You could hide it from everybody. You couldn't track it. You couldn't trace it. So how does anybody know? I don't know. But obviously, there's shorts out there willing to bet that deal, that they can destroy that deal as well. But maybe that's finally the magic bullet. Let's use crypto in stocks, and we can change it. I don't know. All I'm saying is every single stock they sell, it's not about the story. It's not about how good the news is. It's not about, wow, they're in this. They all sell. They don't enforce. They took away the uptick rule. There's no know your customer. You don't know who's financing each deal. You might learn it later on in a filing. There's no tracking of who's selling. You don't need market makers, but that's the reg show exemption. And there's no enforcement of delivery. There are no buy-ins. It's just a bloody slaughterhouse. The over-the-counter is the stockyards that stink, and with offal and manure and fear and the water pools, and that it doesn't drain. The NASDAQ is a very clean organization. You take the wool off the sheep and the lambs, and then you put them on a conveyor belt, all steel and clean, and it goes up to sounds of Beethoven and bleating, and then pops into a clean steel abattoir with slicing machines, and then hoses to get the blood out of the way, and everything drips and goes out through pipes into the Hudson River. Or that's they're just going to release radioactive material into the Hudson. But it's the same idea. They kill the companies. Anyway, so it's 9:05. Let's just see if there's any news. There's nothing going to be today. There won't be anything today. So I'm not going to even look. Fingers up 5 cents now. GDC's down 10 cents. Nixie's up 5 cents. MTN's down 43 cents. All right, let me get some of your comments. I saw one gentleman said he bought more shares. I didn't write it down. It was like 4,000 shares. I was driving. I didn't write it down. Hey, Tebow, your number. Yeah, you are number one. You're number one in everyone's hearts, except for the shorts. Actually, they like you too. Hey, Fast Eddie, but that might be a different Eddie. There's two Eddies. Ralph, how are you? CJ, Yukon. Good morning, Tebow. Hi, YouTube user. Peace. Remember, this is a great time to be buying this stock. Railtown, you know the story. They've announced the story. And the stock sits. It's time to buy. Sometimes things happen with a lag, and it's time to buy. Tebow Teese, Bama Lake. No, you want to distract me by MMTLP. MMTLP is worthless. It is a coat check ticket. It is a uh, what do you call those things? The stub that you get when you park your car. That's all it is. MMTLP is worthless. The only way to get money back from that money which you lost, it's all gone, and I lost $44,000 in MMTLP. The only way to get it back is to move your shares of crap over to um, uh, Nextbridge Hydrocarbon, which is under attack by the criminals. It's under attack by the shorts. I'm not going to go through the whole story. So it's not a guarantee, but it's the only way you will ever make money back is to own Nextbridge. And right now the doors are wide open. You can get one share for one. You don't have to pay attorneys. You don't have to walk the halls of Congress. You don't have to do anything else but support Greg McCabe. It may or may not work. I think it will work over the next decade and work really well. He'll be in his 70s then, but I think he'll have built a team that will create value. But that's the only way you're going to make money back on MMTLP. MMTLP was a complete destruction, first of Torchlight, then MMAT, and then of you, your money. And the attorneys are winning that work for the criminals, and Congress is winning. They work for the criminals. The regulators, they're winning. They work for the criminals. There's nobody on your side. The only way, Bama Lake, to make that money back is to move your shares over to Nextbridge. And by the way, if you have some cash, my proactive approach is buy Railtown and buy enough so that when Railtown, my projection, according to me only, it's not a promise, but when Railtown goes to $55 by May 5th next year, you can make that money back. You just got to let go of MMTLP. Zero is coming back from MMTLP. Now, there's one caveat. One caveat. If they discover fraud at FINRA or fraud at one of the brokerage firms, fraud's a whole different thing. But that's going to be, it's already 5 years, 3 years. What is it? 3, 4, 5 years? It'll be another decade before you see anything. So stop asking about MMTLP. MMTLP is trash. There will never be a settlement. You're not going to get money back from MMTLP. So here in front of you is the ability to recover your account, but you got to let go of that idiotic idea. Well, I lost it in MMTLP. I got to make it back in MMTLP. Hey, I go through it too. I'm not questioning your brain. I'm questioning that thought process. The way to make it back, if you want to take control of your own life and take control of your own account, buy Railtown. Buy Railtown. Right now, 50 cents. And in 6 weeks, you'll make all your well, it depends on how much you own and how much you lost. In my case, what's coming for Railtown's price this year, which I think is $12 and maybe as high as $25 this year. Now, there's a complexity of Canadian dollars versus US dollars. I'll just take the responsibility. I'll take the most difficult and say it'll be US dollars. But, it might be Canadian, which is 75% of the US dollar. But Bomb Lake, if you want to cause a settlement or a resolution of your losses in your own account, buy Railtown. Sit down with a pad of paper. I Bomb Lake lost 50,000 in Railtown. If I buy 10,000 shares of Railtown today at 50 cents, that'll cost me $5,000. So I'll add that to it. So I'm down 50 grand, and I'm pushing my bet with $5,000 more. So I've lost 50. I'm putting $5,000 at risk, but now I own 10,000 shares of Railtown. So what if Railtown goes to $6 or $7 this year? Well, all of a sudden, I've got $60,000, $70,000. I've got my MMTLP back. I've got my original investment back. And by the way, depending on the momentum, you shouldn't sell them. Railtown could give you a multiple of what you lost. But thank you for always asking about MMTLP. There is nothing going on with MMTLP that's going to help you in the short run. All right, I got to write that down. Tebow, Alex, Rail, Canada bought, Tebow bought, good for you. In Canada, bought 4,000, bidding for more. Excellent. I would personally, I'd just go ahead and buy it, but that shows maybe that I'm not as sophisticated as you are, and it's certainly bidding for it has been the better strategy for the last several weeks, several months. But one of these days, I don't think it'll be today. One of these days, I think it'll be next week. And I think things are going to bunch up next week. I think what was filed last night is, like I say, is an attorney organizing her book of documents, or it's in a computer, but making sure every duck is in a row. And the next things, maybe that sets up, we hear about the vote, but then we start hearing about revenue. And that's the only thing, regardless of what the stock price does, regardless of how news stories are written, regardless of how long it takes, the only thing the company should be focusing on, which I believe they are, is revenue. Let's bring in the revenue. Let's bring in the revenue. Let's bring it in. Let's bring it in. Book it, book it, book it. Sign it up, sign it up, sign it up, sign it up. And then by December, or whenever they start a management discussion of revenue, maybe it's 40 million ARR, annual recurring revenues. Maybe it's 50 million. Maybe it's 100 million. But then the important thing is, how fast are revenues growing, and what is the targeted revenue, let's say in the first quarter of 26, second quarter. Well, then we're going to be annualizing at 200 million. And we expect to exit 26 at 500 million. Well, then things rock and roll. And it won't be our fears, our impatience that moves the stock. It'll be institutional buying, which I mean anybody other than me is institutional. Anything other than retail is institutional in that statement I just made. And I think that could start next week. Now, as you know, I've been saying that for many weeks. But I really do think it could start next week. It's always possible something happens at any time. I don't understand the delays. I don't understand the slowness of the process, but it's not, at some point, it's not going to matter. At some point, the growth in revenue is going to cross an inflection point, and all the institutional buyers, the Mavericks, the Omers, I don't know what's up in Canada, the TD America, the Toronto Dominion retirement funds, all those funds up in Canada will start buying Railtown. And I still stand by that. I think it's the most likely buyer is Microsoft, but it could be Constellation Software. It could be, there's a dozen companies out there in the arms race to acquire first movers, first to market, commercialized AI tools. And yesterday while I was driving, I was going through. I should do that before I sign off, but I'll go down your list. Let's go down the list first. All right, I wrote that down. That's a good job, Tebow. Hey, Marty Party. Uh, you wanted to give me a call to make sure I'm alive or that I was live. Thank you for your concern. Well, Tebow, AI partnerships revenue 2.6 million. We went over that, I think. Maybe that's new now, but we've discussed this revenue before. Maybe not these exact numbers. 1.6 million. This is just, look at it like an association. It's just from fees. It's 180 companies paying a fee. It's not meaningful. And it's not meaningful revenue in terms of multiples. What it does do, though, the AIP, it sets up two things. One is they've got a platform, which I assume is run by AI, but they have a platform that allows those 180 companies to cross-sell their AI tools to each other. And as of February, there were 5,000 companies represented in that network. The second thing is, I believe, I don't know though, but I believe perhaps as you join the network, you sign some agreements that means that AIP has first crack at buying you. So it's an opportunity for the guys at AIP to imitate the Constellation Software model of rolling up companies into revenue and creating a huge cash flowing machine. Of course, Constellation did it with a relatively mature, mostly lower margin, but not always, but smaller industry segments that no one else, at least initially, that no one else wanted. And they rolled those up. They left management in charge, made a revenue agreement, had bonuses, ran a lean machine. And eventually they started collecting so much revenue that they could buy other companies out of revenue or using debt reasonably out of affording debt out of cash flow and using that to buy other companies. And they also made distributions. I mean, it's truly, we don't hear about it down here, but Constellation Software, if Warren Buffett owned it, you'd be hearing about it all the time. And that's what AIP is trying to emulate. And it's with an industry that conceptually is high margin, high growth, and is the revolution. Well, with all that high growth and high margin and the revolution talk. There's some risks in there, but uh, that's what AIP is. The excitement of AIP is not that revenue. That's just that's annual dues. That's all that is. That's annual dues. Boring. The excitement is the potential to roll up the companies. Obviously, the meat and potatoes is the ability to cross sell um, uh, stock. Cross sell uh, AI tools to each other's clients and create revenue. Uh, I hate the word, but the synergy of working together. Tebow company previously reported 1.6 million in 23, 1.5 million 21. Yeah, the revenue growth they show is important, but to me, all it means is they're signing up more companies, which is great. So you have a pool of over 180 companies now, and maybe they're approaching 200. Who knows? But that becomes like shooting fish in a barrel, so to speak, where when they go to the roll-up strategy, they have a captive audience. When Railtown goes to sell conductor, all of those companies have clients. That's what that means. It gets better and better. But the revenues are meaningless in terms of value, in terms of multiples. Those revenues, those dues, that little bit right there doesn't really mean anything. Eric B. No 51st state for us in the north. Well, I think it's more likely that Western Canada in the middle and the Western United States and maybe down to the South all become one, you know, one red state. And then the left coast and the right coast of North America are two different, so it breaks into 3 or 4 countries. Who knows? Uh, John Doe, good morning. Slowtronic, we need revenue asset. Let's go management. We do because it makes us feel better. I don't think that's necessarily the company's goal to announce revenue to us. Um, I think the company is trying. I think they know what they're doing. They've built software companies before. They know the metric. There's a very simple metric out there right now. It's not complicated. There is only one metric in let's call it AI 2.0 space. There's only one metric: revenue, recurring revenue, annual recurring revenue. And if you want to make it more complex, you have to add into it what's the profitability, the margin, and what's your growth rate. That makes it a little more complex. And to make it simple, so you don't even have to answer those 2 questions, you just look at what's the size of the addressable market. And if that's huge and there's demand, the growth will take care of itself. That's all it is. It's just revenue. So one news announcement, Slowtronic, of revenue isn't going to change the stock. Hey, they've already announced 5 of them. They didn't tell us the revenue, but they've already announced 5. Doesn't seem to change anything. What's announcing 1 or 2 more? Hey, we got another revenue agreement. We're signing up the farmers in Northwest Saskatchewan and all the cows are going to wear a conductor AI chip, and our revenue is going to be measured in gallons of milk or something. It it's not going to mean anything to us, and it's not going to move the stock. What's going to move this stock and start to make it go? And I know I predicted $1.50 this week, but I didn't think the news would be so inconclusive last week, and I thought there'd be news this week. So I guess I'll move my $1.50 to next week. But what's important, Slowtronic, is that Railtown executes on its revenue acquisition. They've already announced 5 revenue deals without the revenue or tie-ups. Let's say they announce 10, 15, 20, 30 more by January. And if they don't announce revenue or they don't explain it, we won't understand it. But who will? Their partners, Microsoft, NVIDIA, AMD, they're in there in the mix. Their investment bankers will understand it. The venture capital and the family offices will understand it because they're going to be talking to Corey. Acquirers will understand it. And there's an arms race right now. Arms race. That's not a slow turtle walk. That's a sprint. That's a fight to win, to buy companies that are first mover, are commercialized, have a huge addressable market, and their product solves a problem, and it's high margin. And it's in software development. That's Railtown. Checks every single box, every single box. So the market's about to open up. Slowtronic, $55 a share in the next 8 months. Yeah, I think so. 12 to 25 this year. That's multi-billion. Yeah, it is. It is. It is multi-billion valuation. That's what I think is going to happen to Railtown. There's, all right, let's see how it opens up. They'll hit it. It'll go red. Nothing's happened. Oh, no. It opened up in the green. Wow. So it was 1,500 shares. Oh, I see. They tried to get it in the red. 1,500 shares at 47.21, 1,000 at 49.72, and then 348 at 50.05. That's great. Whoever bought that, that's great. And now they did 138 at 49.1. Slowtronic, I guess you haven't been listening, but I'll give you 2 comps, and then I'll go through what Corey said on his presentation, and then I got somewhere to go. Number one, there's one competitor to Railtown. Apparently, nobody knows its name. I ask, nobody seems to know the name, but it's I think it's a private company. I'm sure it's a private company. It's in the Wall Street value creation ladder. They're different in the sense that if you sign up for their product, apparently, it's going to be just their language. Railtown's tool can process all developer languages. It's over my head, but Java and Microsoft 395 and whatever the software is called, they can process it. They can even process English They can even process a picture of notes and then spit it back out at you in English or Mandarin or whatever is necessary. This competitor apparently only does it in their unique language. Anyway, um, that competitor just raised $100 million in a series, one of the series rounds, private equity, which you can't participate in, Slowtronic. The only people that participate in private equity are the people on the Rolodex, wealthy, or the institutions. Railtown you can participate in because it's not in that maw of Wall Street. Anyways, they raised 100 million at $1.1 billion in value, and that's like Series A or Series B. Also, you should ask yourself one question. Do you feel lucky? Well, do you, punk? You should ask yourself, do you know of a single, I didn't know this answer myself, but you might if you follow the industry. Do you know a single, I'll call it AI 2.0, this next phase of AI. Do you know a single AI company who has a tool that's commercialized, a tool that's as SOC 2 approved, SOC 2, a tool that's first to market, a tool that's best in class, and a tool that solves a real massive problem? Do you know a single one of those companies with a valuation under $1 billion? I'll give you the answer. There aren't any. They're all trading or being valued above $1 billion. So in my first example, if you use $1 billion, 1.1 billion, Railtown's market cap as of last night was 85 million. So if you divide and I'm doing it in US dollars. There's that distinction between Canadian and US dollars, but I think the competitor is out of Palo Alto. So I'll stick with US dollars, but just remember there's that distinction. So Slowtronic, if the competitor is valued at 1.1 billion and all companies meeting the same parameters are valued over $1 billion, Railtown right now is 85 million. If you divide 1.1 billion by 85 million, it gives you a 13x. Once the story is told, once the buying comes in, that's $6.50 a share. $6.50 a share. I think this will happen this year. Now, the other thing I want to show you is a company called Sound. That's how they say it in Roanoke and in Canada. Sound. Sound trades for as of last night, $7.42 billion enterprise value. SoundHound. SoundHound. SOUN. I'm not going to look it up and prove it to you. You can do your own homework. But their revenue is projected at about, they give a range, but let's us try to make it simple. Their revenue is projected at 175 million. And they have no profit. There's no profit margin. That's SoundHound. It's an AI company worth $7.5 billion. Now, I know it's just one company, but if you take $7.5 billion, currently fully diluted for Railtown, the number of shares is 222 million if you include employee options and warrants. 222 million. How much does it cost in terms of shares to add in companies from AIP when Railtown's trading at $6 or $5? I don't know. Let's call it 250 million shares. You can adjust that whatever way you want. That's $30 a share. It's $30 a share. And Railtown, and I'll go over, I was trying to do it last night in the car, and then I did it 2 days ago. I played the video for you. But it never worked. So I'll try to do it now, and then I got to go. It's already 10 o'clock. So another way to look at it, Slowtronic, is revenue. Railtown has announced 5 deals so far. Let's say they get 10 more announced this year, 20 more announced this year. Let's say 20 more announced by the first quarter of next year. So it's 25 companies. Let's say they all do, let's go low. They all annualize at $1 million in revenue. So that's 25 million in revenue from Railtown. We know that on the AIP side, they currently, the underlying companies are doing over 400 million in revenue, and I've shown that. You can go to their website, AIPpartnerships.com, and you can say, who are our partners? And you can see a list. And then you can go Google those. Some you won't find anything, others you'll find revenue. I'd say AIP could easily add, by first quarter, 150 million in revenue. So if during the first quarter they get to 175 million in revenue, What are the multiples, Slowtronic? I've shown you all this. The current multiples being paid are between 100 and 200x. That's the valuation models out there for first movers, commercialized AI tools, and the products that solve a problem. They have high margins. They're being valued between 100 and 200x, 100x, 150x, 200. I've shown you. Well, let's just take 175 million. Let's just do it at 50x and see what happens. That gives you 8.75 billion in enterprise value. And if you divide it again, you can pick the number, but 250 million shares, that's a $35 target. Now, if you know, I only used Railtown's conductor getting 25 million. The fact is, Railtown's conductor is meeting with enormous success, and Railtown's conductor itself could do, by the first quarter projected forward, it could be doing 250 million. And you add that to 150, you could have a company projecting 400 million. And if it's growing, Slowtronic, at a rapid rate, 400 million could be purchased at 50x. Well, let's use SoundHound's multiples, 35x. 35x. 400 million times 35. It's a $14 billion company. Divided by 250 million shares, it's a $56 company, Slowtronic. So that's where I get those numbers. I don't just make them up. Of course, they're projections, they're not promises. I'm going to go get my notes from what Corey said, and then I'm going to skedaddle. But hang on a second. Oh, these old bones, they move slow. I don't need no rocking chair. All right. I'm going to tell you quickly. I've done this 2 times before. This will be the 3rd time. Corey did a presentation, Corey Brandolini with Marwan Haddad, did a presentation almost 2 years ago, a year and a half ago, approximately. Here's what he said at that time, and it's out there on YouTube. There's 2, I've shown them to you. There's 2 presentations. So 4 years ago, he said, that was a year and a half ago. So about 5-6 years ago, they wrote a white paper with this idea that they have. And then they spent 3.5 years of training. He calls it a machine. They spent 3.5 years training their machine. And their idea at that time, he describes as a very large and expanding market. Software. There's no larger market in the world. Software development. then Corey talked about, they created a large beta testing universe. So they've taken the conductor, they now have different names, but rail tracks, lang tracks, and conductor. They had different names back then, and shredder, and they've beta tested it for years now in a large universe of software developer teams. One of the things that Corey and Marwan did and their whole team is they integrated their AI tool with all developer tools. I used that word. He used a different word, like language, all developer software language. He had some other word, but the point is it's integrated with everything, every tool that every software developer out there uses currently. Railtown's integrated with it. So Railtown can sell to any software developer team in the entire universe. He did emphasize, Corey did, Railtown is the first mover in this product they've created. They're the first mover in their area. I hate this word too, but this is a passion play for them. And why is it a passion? Because they each have developed software over decades. They've built companies before in the software space, and they've seen this problem. These problems come up as an issue over and over and over again, and they wanted to solve it, and solve it they have. So one of the things they wanted to do, again, I'm going from my notes from his presentation to OTC, I think it was to OTC Markets. He said, we want to remove the mundane tasks from the software developer teams. And we want to also solve software problems for the team. So they call it an AI agent. He said, we've been working at this issue, this tool, for a long time. Obviously, it's 3 or 4 or 5 years. They've been working on it. They're not just a startup. They're not a company that has an idea. They've already done it. They started early on purpose. So here's something that Corey said in his presentation. And I guess he and Marwan both did this. They spoke with Microsoft before they got started 5 years ago. And I can only imagine the conversation. Hey, you know what? This is our idea. He didn't say this. I'm imagining it. Here's our idea. Is anybody doing it? If we did this, would you want to work with us? Microsoft said, Microsoft said they were interested. They immediately, maybe not in the first moments, but as the product developed, Microsoft immediately signed up Railtown for their Microsoft partners. So just imagine, they have developed software before. They see the problem, they create the idea, they call Microsoft. I'm guessing nobody's doing it. And Microsoft said, yeah, hot damn. So then Corey went on to describe something that I think is exciting if you extrapolate it. I think what he said is that Microsoft bundled, I mean, I'm 95% sure this is what he meant, that Microsoft bundled what's now called conductor and lang tracks and rail tracks into Microsoft Azure. They bundled it into GitHub, which is owned by Microsoft. These are exciting things. And just because the short machines that are just relentless, like the Terminator, dumb but relentless, they just keep going and going and going. When the story gets out and the revenues start going up, and that's my contention, the story's not out yet, or at least not out effectively. This is so powerful. There's 1 million users of developer users of GitHub. Anyway, so then Corey went on to say that his tools are battle tested. And then he pointed out that his AI tools, they help Railtown build their AI tools. They're self-learning. They collect information. They take feedback from the beta test group and they improve. And they have such a head start on the competition. They're ready to go in the middle of this arms race. So anyway, this was 2 years ago. Sorry, a year and a half ago. 2 of the 3 first created tools are already launched with Microsoft at that time. I'm just relaying my notes from Corey's presentation. He said that Railtown solutions are a SaaS tool. It's a software as a solution, I guess, SaaS tool. High margins, he said. We have high margins. I don't think he put it that way. He said, of course, because it's an SaaS solution, we have high margins, something like that. It's easy to sell. Companies love it. Anybody can use it. It's easy to sell to the customer. There's no barrier that the customer has to overcome. They call it, again, he used this name, it's generative AI Copilot. It increases productivity and it lowers costs. And it gets you a date with the neighbor's wife. He then went on to talk about his experience with Marwan. Marwan came in and talked too. A typical developer's day, a developer's team, software developers, they only spend 20% of their day writing code, increasing good, adding value. Most of the day is wasted by problems and repetitive tasks. He said, this is a big problem they're solving. 40% of a developer's, he calls them devs, time is fixing problems. He mentioned a company, Rogers Communications, but I don't, it's irrelevant. But he also referenced a study by Stripe. Stripe wrote that 42% of developers suffer productivity loss. 42% of the time is productivity lost because of the mundane tasks, the repetitive tasks. So he put a question: if you're spending 40% of your budget on debugging and solving problems, that's not an effective budget. So he went through his products. I'm going to skip over it. Root cause and release notes. They're now called Lang Tracks and Rail Tracks. And then Scrum, he called it Scrum Master, Copilot. That's Conductor. They've changed the names. But what he said, the two differences versus everything else you hear about out there, they call it, instead of a large language model, they call it a targeted language model. And they use the private data of the companies. Private data, it's vertical. it's not out there in the internet so that everybody can steal it. And it's proprietary, this engine, self-learning. Then Marwan came on, and he emphasized that it's like an orchestra. The platform, you know, conducts, I guess, an orchestra. It's uh, real-time data. It's secure. It uses the cloud, and Marwan emphasized they use a large ingestion machine. It's a large ingestion machine, like Governor Chris Christie. And then Corey said, "Good point. It's a co-pilot. It uses Microsoft Cloud, and I don't know. This is back then, and what a bug! It tells what the bug is before the team can find it, and it can use. I wrote down C# or Java, and he listed some other languages I didn't write quickly enough. And so Marwan came on and talked about its triage. This tool, these tools can do what it would take a development team hours to do, and dollars. They can do it in minutes. And when I first heard the story, I was told what a team could take weeks to do is down to minutes. So then Corey came on to say that over the years, these tools that Railtown has created, they have experienced a lot of training. They have run and rerun and tested and processed up there to make sure that these tools capture 100% of every bug in a company's software. Battle tested. And then they absorb all this information, these tools, and they translate it into easily understood English or whatever you want, so that the CEO can even understand it. Then he goes through the products, and I'm going to skip that for time. He talked about how the developer teams can communicate with the Railtown applications at a humanistic level. Humanistic. I think they can talk to it, but I think it can also be typing or writing. And then they get information back in English or whatever language. This is a breakthrough. This is something they do. And then he said, "How big is our opportunity?" He said, "It's gigantic and it's growing." Sounds like Elvis Presley. He said that $11 billion were spent on developer tools. This 2 years ago. Were spent on development tools, 11 billion. But then, and even if you use that and assume a 3% penetration, that's big. But then he said that corporations are going to spend $300 billion a year in added costs to develop their software, to upgrade, to bring their software up to this AI speed to keep up with the competitors at a minimum. But he said, you know what? It's actually not a cost. It's actually not a cost, because what it does, these tools do, they give you back, they increase productivity, they decrease costs, and they increase cash flow and profits, one presumes. GitHub made a projection that this new AI environment, these new AI software tools, development tools, are going to grow annual worldwide GDP by $1.5 trillion. $1.5 trillion. It's a massive market. And he said a lot of people ask him, well, how are you going to make money in AI? How are you going to make how do you make the money? And he used the example that Microsoft has created a co-pilot. This is a year and a half ago to the Microsoft 365, and they charge people for it. That's how you monetize it. All right, those were the notes. It's very exciting. I know the stock price isn't showing it yet, and that's frustrating. But my contention, Slowtronic, is that it will show it. Slowtronic, I have 185,000 shares, so let's see how it goes. Well, that's a nice position, Slowtronic. A man in your position is in a good condition. I don't know if I wrote that down. I don't know if you're pulling my leg, but I'm going to write it down because I believe you. I have 180. That's a great position, Slowtronic. It's amazing. 185,000 shares. So let's see how it goes. I'm still worried about the lack of updates with all the delays. There are a lot of updates. There are a massive amount of I don't have time to show you, but if you go to the news, they've been putting out news this year. I'd say they've put out a dozen to 20 pieces of news. What's frustrating, I think, and I blame it on the attorneys, is when they entered into the MOU in February, there was like a gag on what the company could say. That's off now. They announced that last Wednesday, and then they had a second piece of news last Wednesday. I don't really understand why there hasn't been news this week. So I'm projecting there'll be news next week, but maybe there'll be a delay. But I think Slowtronic, a lot of the delays are attorneys and regulators and procedure. And it's just also, it's a lot of people. You know, you've probably got 5 to 10 people on the Railtown side. You've probably got at least that many on the AIP side. You've got, I would guess, 5 to 6 decision makers over at Canaccord Genuity. You've got all of the underlying network. Each of those 180 companies probably have 3 people involved. You've got investors and boards. And then you've got the companies that they're signing up, each have CEOs and voting procedures and probably a board. And then you've got attorneys involved in writing up all the agreements and documents, you know, for potentially dozens of companies. It's a pretty clogged by attorneys process, but it'll start to build. And I guess Slowtronic, I'm going to leave. Railtown's now at 48 cents, which is up on the day. 100 share volume. That's not possible. 100 shares? It's what I show. 100 share volume. You don't want to sell. You don't want this to be hot money. You sound like you're a trader, but Railtown should, in my judgment, should be trading at $5 today. If it were in a private equity ladder, it already be valued there, in my judgment. But because it's a public company, because they have to follow public company rules, right now we are able to buy the stock at a pre-money or a pre-seed or a seed, that these are the terms they use now, seed round valuation. Uh, they're going to skip the Series A and the Series B and the Series C. They're already public. They're already there. And anyway, as the story gets told over the next weeks and months, big buyers will come in. They're not there yet, but they'll come in. They'll take stock off the market. And I think 5 or 6 or 7 is the starting point, and that's why my targets are so high. All right. Dachamp is here. You're awesome, Dachamp. Added 2,000. Oh, I got to write down your name. Dachamp is here. 2,050 added. That's great. 51,000 is awesome. Awesome. All right, let's go through the prices, and then I'll try to update you if anything happens later than in the day. Railtown is 48 cents. I show volume of 100 shares, which I just can't believe. 48 to 49. And then Finger is up 5 cents at 154. GDC down 3 cents at 467. Nixie down 4 cents at 177. G Bucks is down 1.5 cents at 18 cents, 8.186. So there we go. All right. Thanks for tuning in. I'm sorry I've been disjointed the last couple of days, but I'll stay alert during the day and try to, if anything happens, which I don't expect, I'll try to come on again anyway. But buy, hold, add, and I wish you guys a happy Friday. Cheers.